Okay, guys, welcome back to another video, and we're going to be talking about a BTC USD trade, that is Bitcoin against US dollar. And cut this trade, so I'm going to be talking about it. Right, you can see right of the bars that we have been bearish, have been capping below, leaving behind sell side balances, buy side inefficiencies or CBs. You can see the most recent price action is this reaction from this level. Price taps into this fair value gap right here, broke structure below these three upwards candles and retraced back into this other block, and then it sank down, taking out these lows. So we have taken out major liquidity, right? This is major liquidity. And when we take out major liquidity, two things can happen. Price can continue going downwards, or price can have a retracement. So you have to wait to see what price is going to do. Now on the daily chart, you can see that similar price action as to what happened here is happening here. Just that there's no fair value gap, right? If there was a fair value gap right here, this thing would have been high probability. But you can see that price still went ahead and came and took out these lows regardless of the whole low probability setup. So after that low got taken, it's a liquidity, right? So let's move it towards the right. After that low got taken, that's where I took my trade, and that is this day. We are still currently on the day, and this is Wednesday. So let's drop down to the 1 hour chart so you can see the setup is pretty simple, pretty chill, nothing really big about it, nothing serious. Okay, so this is that level I told you about, that there was no higher time frame fair value gap. You can see on the 4 hour there's actually a fair value gap around this region, but since there's no daily fair value gap, I wasn't expecting or since price did not close with a body below this low, I was not expecting price to continue going downwards. So now we have this fair value gap. Price tapped it, broke structure to the downside, right? This now became an order block. So what we are doing now is marking out what price has done, so we can predict what price we do. So now that order block was a good zone to take a sell, right? So this have been where the sell would have occurred. Stop losses above the high, and the lows will be the target, right? Or 3.27 arrow, and you can see that price hit the target beautifully well. But we were not in that trade, okay? So this is just something for the books. And after taking out this low sell liquidity, you can see that we have a sharp reversal, right? On the hourly time frame. Price took out this low, and you can see this wick, very large wick. So if we expect a wick to hold, we don't expect price to close below 50% of the wick. So this is 50% of the wick, and you can see that price didn't even get there. Price closed above 50% of the wick, and we expanded, targeting these highs and these highs, right? So these are relatively equal highs. You can see that they are almost at the same level, right? So we took out those highs, and currently we are in premium once again. We are in a consolidating profile. You can see that price is moving sideways. We are not really moving in any direction. So when you get to an extreme of the range, you are advised to close your charts and close your trades so you don't get run over by the market makers, right? This week is also NFP week. Friday is NFP, so trading on this week is risky as a whole, but it is what it is. So on the 30 minutes time frame, you're going to see the structure beautifully. All right, so this is it. After price took out this SL liquidity from this week, you can see that we had an impulsive market structure shift above this high. But let's put the candle right here. You can see that we broke above this candle, that is in MSS. The price broke above this candle as well, and this candle as well. So immediately that happened, the next thing to do is to pull out our Fibonacci, which is our weapon of mass destruction, from this low to this high, right? Sometimes you can put it at the open here, but because of how big the wick is, I wasn't really comfortable putting it right there. So the long position comes here, the lows with the stop loss rather will be at these lows, and then take profit is going to be at those equal highs above, relative equal highs above. So these are the relative equal highs, so we can mark this out right here as equal highs, and then you can see what happened. It's very clean, it was very clear. Today was Wednesday. You can turn on the Q zone indicator so you can see that price opened today and dipped back down during the London session into this level. It formed a pool of liquidity around here, right, in form of relatively equal lows, although this looks like a sweep, but this sweep, but there was no follow through, so price didn't close above this fair value gap. It respected it, went down, swept it once more during the New York session, tapped into the OTE and this other block, this down close candle is also an other block, this rejection candle, and then you can see that price absolutely ripped. The next entry would have been on these after price closed above this theory. After price closed above this theory down close candles, you can see that this is another block. So price can, you can easily taken the second entry around this level, but I caught this one. Okay, I caught this one, not this second one. So that was a trade, and it was a 4 hour trade, 4.03 hour trade. And you can see that we are currently retracing after hitting the draw on liquidity, and we are done for the week because this is NFP week. So thank you very much for watching. Leave a like, leave a subscribe, leave a comment, and see you in the next video, guys.